Now, U.S. farmers are trying to cash in on the rising global food demand by planting more wheat and more corn this year than back in 2010. This is all according to a report out today by the Agriculture Department, the latest survey, in fact. The agency is also saying that corn and soybean supplies fell unexpectedly at the start of the month, and that really sparked a rally in futures for both of those commodities today. I want to talk a little bit more about the latest crop report with Dan Cekander, a director of grain research at Newedge USA. He's also a fourth-generation small farmer. Joins us from our Chicago bureau. Dan, thank you for your time.
Thank you.
So looking at this report today, what's the most interesting to you?
Certainly the feature of the report is the March 1 corn stocks number. It did come in about 180 million bushels below the average guess, below all the guesses. Basically shows you that we're feeding corn at a rate that cannot be sustained, or you risk lowering U.S. corn carryout down to minimal levels. Stocks use ratio, government's currently projecting a 5% annual stocks use. We're going to slip down, below that level somewhere in the 4s. We're only going to have a little over 2 weeks usage at the end of the year, so a very tight supply situation is forecast.
Let me ask you, bottom line though, what does this all mean for consumers?
Well, for the consumers, the one thing you got to keep in mind when you talk about food prices, only about 7% of that food price has to do with grain specifically. Those prices are mainly made up of marketing, transportation costs, distribution. So yes, the higher grain prices put modest upside pressure on food prices, but it's all these other factors that really drive food prices.
Of course, factors also include the weather, which we sometimes can predict, but we can't control.
Well, that's exactly right, and in the tight supply situation this year going into the 2011 crop year will put all kinds of pressure on U.S. weather to produce basically trend line yields or above. Because if anyone plugs in a trend line yield into their balance sheets, you still have a very tight supply situation here in the U.S. and worldwide.
Well, and how much is that connected? And how much is that connected to the droughts we had earlier in Russia and the incredible flooding we saw in Australia?
Well, that certainly helped put us in the situation we're in, particularly on the wheat side. Tightening up, the FSU supplies. The EU supplies, as you mentioned, Australia, it all played, to help put us in this tight supply situation.
Hey, just quickly before we wrap up, Dan, can you tell me a little bit about how these numbers are devised? What exactly are the farmers doing as a fourth-generation farmer yourself to figure out the plan for the year?
Well, I think the first thing you got to remember, in general, farmers simply rotate their crop. In the heart of the Corn Belt, they just rotate corn, soybeans. They just go back and forth. They like, what the rotation does for the soil. Now, people also run a net return analysis just to figure out, which crop returns the most. And actually since last fall, corn has had the best net return on paper, and that's why the corn acres are up significantly, and we actually dropped the soybean acres. So, farmers did respond to the economics.
Talking about the economics of agriculture today. Thank you so much, Dan Cekander, a director of grain research, and that's from Newedge USA. Appreciate it.